Hello there, everyone. It is Will Hassel here once again for your weekend review and look ahead. As you guys voted on Twitter, I am using the Trade Monster platform, which is the new broker I am a part of. My account did switch over on Monday, and I did get that awesome Under Armour 2-for-1 split, which I will talk about later on in the video when I get towards my portfolio. But to start off, here we are with the Dow Jones Industrial Average ETF, the DIA. I use the spider form. I could go and use the actual chart for the Dow Jones Industrial Average, but I don't think I will. So not a whole lot of big important news other than jobless claims, which are coming out this Thursday again, have been actually doing rather well, it seems. The number that we got here this past Thursday was 304, and a lot of people were expecting, since the week before we got we were trying to break into a 2 handle, and it said the revised, actually it was 302 when we revised instead of 3, and the fact that we went from 302 to 304 really isn't that bad to me. I mean, when I heard the number, I was like, I'm gonna take this number because it's actually not bad whatsoever. We did have stronger than expected retail sales this past week as well, which did kind of go and add into that just kind of building up phase that we've been doing. Don't want to trade that. But here we are. As you can see here, when I bring up onto a price, my 200-week moving average is not working. Let's try and go and edit that just real quick. Here's all of our technical stuff. Just kind of showing you some of the tools for Trade Monster that are pretty awesome. Should be chart. When is online. Technical alerts, that's what it's under. I apologize for this. So I want to go and try and... no, that is not what it is under. Alright, anyways, we're just going to have to go without the 200-day moving average on this chart. But as we can see here, it did close way above its both its 50-day and 21-day moving average. So that is a good positive sign. Moving over into the SPY. Once again, not giving me the 200-day moving average. That's weird. A little bit more choppy, as we see here in the 5-day trade. Did end up higher. We had good data, and we're still kind of bouncing back from that slight decline that we had over the past couple of days. Went up over all the simple moving averages, and here's the QQQ, which I do own. Not really as good as the other ETFs that we see here, but I mean, I still own just a tiny bit of it. I'll show you that later on in the video. But first, I'm going to get onto our to some of the things that are going on this week. I'll go into just going into some of the names that are some of the events that are happening. Then I'll go into names that are reporting this week. So we have on Monday nothing really happening other than some earnings. Tuesday we have March existing home sales. We were looking for 4.57 million versus last period of 4.60 million. Nothing else really going on that day. On Wednesday we have March new home sales. We're looking for 450,000 versus last period of 440,000. We also have the Bank of England releasing their minutes from the April Monetary Policy Committee meeting, which should be interesting, seeing just to see what comes out of there. There has been some talk about what's been kind of happening over in that space. Yeah, I mean not that space, but over in Europe. The possibility of them actually doing some QE. Now I don't know if that's it is the European Central Bank, but we still need to kind of keep an eye on the England Central Bank just to go and get a feel for what's kind of going on with them. But yeah, make sure you pay attention to that. Thursday we have our weekly jobless claims. They're going to be released in February durable goods data. We are looking for 1.9% versus last period 2.2%. So that means we are looking for a decline in that number. And also on I already did durable goods. Sorry. On Friday we have April Michigan sentiment, the final, the revised. We are looking for the estimate is 83 versus last period of 82.6. And then also a thing that I highlighted for this on Friday is Russian Central Bank holds a rate meeting. So I think that's going to be important in terms of what's going on in Crimea. Russia has been, with the whole currency, they've been having a whole lot of troubles with their currency lately. So we're going to go and see, just how they're going to move, because there's been some talk that maybe Russia could spiral into a recession because they haven't been growing that much. So you just want to keep an eye on that. Now, going into some of the earnings that are coming out on Monday, we have Netflix will be releasing their earnings. I highlighted that one because that seemed like a big one. And on Wednesday, we have Apple releasing their earnings. And then Thursday is a plethora of earnings. We have Amazon, Caterpillar, GM, 3M, Microsoft, UPS, Visa, Starbucks, Under Armour, which those three names I do own. And on Friday, we have Ford that is coming out with numbers. So we want to be prepared for that. Thursday is going to be a big day, especially for me. I have, here, let me just show you. I have basically a good almost 30% of my portfolio going and releasing data on that day. Just breaking down into some of the things that happened. My account value is actually a little bit weird. They did take $75 from transferring fees. I'm going to have to talk to them about that because I believe they reimbursed me, but I haven't received that yet. I did receive the stock split 2-for-1 for Under Armour. That was nice, but Core still leading in terms of percentage holdings. QQQ is a small. I have been thinking about getting rid of that. Still got some Starbucks in there. I've got half of the position that it used to have, so not all that much, but I still like it. If earnings are good, you may actually kind of want to add more there. JPM still got some hedge. I like having 20% of my portfolio short in this market, especially because sometimes we get a lot of these days where it's just kind of flat-ish. So I like being hedged for that. Having some active shorts there. I'll actually go through some of the names that are on there. I actually have to switch to Scottrade in order to see the portfolio that they have, because when I click on it for Option Monster, it's a little weird. but they are they're short. Brookfield Asset Management Class A. Well, let's actually switch to the table view that way. Sorry, I can't show you all this on my other monitor. Well, actually, they just have a long position in Brookfield Asset Management. They have a long position in hold. They're short Caterpillar. They're short Commvault Systems. Short Tempur Sealy International. Short CenturyLink. Short Fastenal Corp. Short 3D. And short IBM, which after the earnings that IBM made, I think that's probably a great place. It's actually kind of not a bad place to go in short. IBM is through owning the hedge ETF. AIG, I do like them as well. Kind of have to be careful because I've gone through a couple earnings sessions so far with them, and they like to run it up into earnings. Then once earnings comes, it pops, and then you sell. So I may be selling. I do like them in the long run. It's just nothing's really been happening. Positions. Oh, by the way, I show my account totals because I am completely and unequivocally transparent. I let you guys see my losses. I let you guys see my gains. I even show you how much stock I have in each one, so you actually know what I do. That's why I post my performance at the end of every trading day, because I like to be transparent. Under Armour, I now have 10 shares. I have to go and change actually the cost basis to my actual cost basis, which was $114 a share, so it'll be like 57 per share or something like that. But I do like Under Armour right here, especially ahead of earnings, because I do think that they will be. Cool thing about Trade Monsters, I can just go portfolio and then click on all my charts. So here's hedge. Like I said, it's been actually kind of interesting seeing it still hover around 13. When I see it go above 13, normally for me that's almost like a volatility play. In fact, you know what? I'll just bring up a chart of the VIX real quick, just to end off kind of what we were doing with all the big indicators. VIX kind of almost getting towards breaking 14. If we remember, 14 has been a key level here. I'm just going to do a 6-month chart in 1 year. Here's 14 right here. And actually, let's draw. Let's make sure we're on the exact price. I'll call it right there. How about that? So there it is. There's about $14. I should drag this down a little. So there's about $14 right there. As we can see here, $14, especially this past ever since February. Coming into this year, we see 200-day moving average is actually working now. We see that there's this kind of like holding pattern there. We broke above it a little bit. I'm sorry that all that stuff is flashing. And then this kind of consolidation, kind of back and forth, dip below there, and then the tech sell-off hit. So we spiked up again, but we have been making, have been going down a lot more. And then here we are banging around 14 once again. So 14 for the VIX. Make sure you just watch out for that. Maybe set an alert in CNBC or something like that. But I'll switch that from a 1 year. But it's kind of interesting when hedge gets don't want to trade gets below that 13 line is also kind of interesting because it's almost like the 14 line in the VIX. We see it popped up here during the tech sell-off, kind of banged around 13 down there, but ultimately hasn't really held that too much. So, just kind of an interesting thing. That's why I keep 13 there as a level to spark my interest. Visa actually had a really good week. I had a lot of multiple good performance days for Visa with some pretty strong movement coming up out of it. I'm trying to break some of those short sells. A lot of short sellers covering there. Was above It's simple moving averages. I believe that is the true 200-day, and it does look like it is resting just right on that 200-day moving average. Don't know why it isn't showing it for this one though. It doesn't even show the price through there. Okay. But let's actually change to a 1 year, see if that does anything. Oh yeah, it shows it on the 1 year. Huh. That is interesting. Things being interesting aside, going back to stocks, sorry about that. JPM, just really kind of flat through these past couple days. Earnings still kind of coming to a shock to some people. Especially since we had some other banking names, which I think we're going to take a look at after I go through my portfolio. Really kind of rose up above some of the other ones. Michael Kors has been doing fairly well. Trying to stay up above 90. Like I said, earnings from Michael Kors is actually the 20th. It's next month. It's a month away, so still some time to let it breathe before then. AIG been doing a lot better recently. Like I said, this is kind of the run up into earnings. I'll show you a 6-month chart. So here's that one earnings. I keep trying to trade. Here's 1 year chart. So we've got earnings, run up, earnings, run up, earnings, fall. Kind of mini run up into earnings. From down here and then up, and then kind of trying to run up again into earnings. So just kind of showing you that pattern that I saw. I do take that into account. I think I may, if the profits are high enough to go and cut that out. I actually don't. I think I'm just now in profit for AIG. Under Armour has been having some nice action along here. This last day was a bit of a little decliner, but ever since the split, it's been doing fairly well. Really kind of gaining some of that momentum back that it lost a while ago. But I think we can head back, especially with earnings coming up. I don't want to be short this name necessarily coming into earnings because I do think that they will beat. I do think that let's do 30 minutes. I do think that when they beat, that they will most likely go and get, there will be kind of like a short squeeze-ish thing going on. Shorts are going to get scared. Starbucks earnings coming up again this week. Visa, Starbucks, and Under Armour, all members of my portfolio, reporting on Thursday. We can actually go deeper into what the earnings calendar looks like. So just switch to quote. And here we go, earnings. And ignore that it says it's a C. So yeah, the mean is around, looks like they're predicting around 69 cents a share. That would be growth, but we'll have to go and see. It has been so far a pretty strong couple quarters for Starbucks revenue growth. Especially, I think we're going to see some more revenue growth going because it's actually kind of funny because I have been on Friday I talked to some of the baristas at Starbucks, and they say they're moving in some of the Teavana hot and cold teas, moving away from Tazo kind of getting that brand in there, and I think that will actually help Starbucks out because they do own Teavana, so they can go and improve their margins through that. Let's look into some of the banks that reported, like Bank of America, who actually did some pretty strong earnings, and I kind of really like their earnings. Let's go back. If I remember, did Morgan Stanley report earnings? Yeah, I think they did. Actually, let's do the quote. That way I can go. Yep, they did report higher earnings. I actually really like Morgan Stanley. It's not just because I've been invited to go into their offices, their local offices here multiple times. It's because they have moved away from trading and somewhat underwriting and more into asset management, which is really where the key business is. If you've been following me long enough, you know that I don't really like Bank of America too much, except for the fact that they have Merrill Lynch. And full disclosure, my dad does have a wealth manager with Merrill Lynch. But it's really, I think Merrill Lynch was the best investment Bank of America's ever made. The wealth management aspect of all these banks is what really drives future revenue, not trading, not IPOs. Because as we saw from JP Morgan, loans, IPOs, and stuff like this doesn't, and trading can be, in fixed income trading can be very volatile. And it's banks that have very strong asset management really start prevailing. Goldman's earnings were higher, but they kind of faded away. Same thing, they kind of almost had like I thought of Goldman's earnings as almost like a better JPM. They kind of still report the same thing, but it's because they're Goldman that they somehow get a little better rep for it. I don't like Wells Fargo. I don't like being too heavily exposed to the mortgage side of things, even though I was long Fannie Mae a while back. It's just I don't want to be too tied up in mortgages, especially at a time when maybe the housing market's coming back. It seems like it's coming back, but at the same time, it's just, to me, I don't like it. I don't know too much about it, so I try and stay away from it. If I did have to pick some banks to go and like, I do like JP Morgan. It's the cheapest of all the banks from a tangible book value. And I like Morgan Stanley. I think if you a combination of Morgan Stanley and JP Morgan in your book, maybe some Bank of America or Goldman in there, I think you're looking for strong growth into the oncoming years, because they do have all that great asset management business, plus with JP Morgan you get some of that lower price to tangible book value. I think I'm going to wrap it up there, guys. Thanks for watching. Hopefully you guys continue to watch. Hopefully you continue to follow me on Twitter, follow me on StockTwits. Please check out all of the other members of the Leaders Investment Club. Some great articles. A fantastic article out recently by a couple of our members, like John Dukas did a great article about Mexico's emerging markets. And then Ramez did a great, aka at Geek on Stocks, posted a great article about Amazon and LoJack. So those are two things that you may want to go check out there on the Leaders Investment Club website. But yeah, like I said, please do check out all of them. They are all incredibly smart guys. Even if maybe just check the Leaders Investment Club page, see maybe their Twitters, start following them and stuff like that, because they all really deserve it. All incredibly smart guys. So I'll see you guys next time. Thanks for watching.